Eva, what's your trade on Snap?
I agree. It's a buy. I'll explain why we haven't owned it for many years and why I like it now. We haven't owned it because they were struggling with monetization, just like WhatsApp is. So it's very easy to monetize Reels, Instagram Reels or TikTok, but very hard to monetize messaging. And that's the category Snapchat was targeting. So now I like it because it looks like their new advertising strategies is becoming more and more efficient. And I also like the fact that before today's pop, they were down 88% since their COVID-19 highs. That's a big drop. I also like the fact that their revenues have gone from 1 billion to 4 billion in 5 years. That's 4x. It's a great number. I don't like the fact that they're still not profitable. I think they have to start getting economies of scale. We'll see if the TikTok ban ever happens. And if that ends up helping Snapchat, I want to mention also that back in 2020, India banned TikTok, and that doubled the user base of Snapchat in India. I'm not sure we're going to see that now, though, because Instagram Reels was just getting launched back then, and we didn't have YouTube Shorts back then. So we'll see how that plays.
All right, just real quickly, you're a buy, but would you buy here at this level when it's up 27% on the day?
Great question. I think no. I would wait for a good entry point. I think, and also it's a macroeconomic discussion when GDP GDP growth is coming down and inflation is still sticky. Do you want to be in such a high growth company, such a speculative growth company? So I would wait to get into it in a few weeks if I see a better entry point, or even in a few months.
All right, Eva, let's move on to Exxon Mobil. The stock is under pressure after a mixed quarter. Shares down 3%. Pippa Stevens has the story here. Hi, Pippa.
Hey, Tyler. Well, a mixed quarter for Exxon, missing earnings estimates, although revenue did beat expectations. Net profit came in at $8.2 billion, down 28% year over year. Now, the miss largely thanks to weak natural gas prices, which fell 30% during the first 3 months of the year, as well as not as strong refining margins. Still, though, CFRA's Stuart Glickman telling me the quarter was all in all not bad and that nobody was expecting the same blockbuster results from the last year. Now, some of today's stock reaction could simply be sell the news, especially after the stock hit a record high earlier this month. Now, one very bright spot during the quarter was Exxon's Guyana operation, where production grew at higher than expected levels, reaching more than 600,000 barrels of oil equivalent per day. Earlier today, CEO Darren Woods telling CNBC Guyana will, quote, go down as one of the best deep water developments in the history of the industry, which is why Chevron also wants in through its proposed acquisition of Hess, Exxon's partner in Guyana. The two oil giants are locked in a dispute over whether Exxon has a right of first refusal. Woods saying it's not a play for Hess, but rather protecting the value Exxon's created in Guyana. Meantime, Chevron CEO Mike Wirth telling CNBC they are very confident in Hess's interpretation of that joint operating agreement. Guys?
Pippa, thank you. Eva, what's your trade on ExxonMobil here?
It's a sell. I do like the sector and the category. I do like oil in this market with the tensions in the Middle East, but I don't like the company. Their chemical sales came down. Their PE is 1.5 times their peers. The total enterprise value to revenue is double their peers, so they're relatively high priced. And I think there are much better competitive companies in this category that I would choose, such as Phillips 66. That's a great company. They are better priced, relatively speaking. And they're also targeting the green energy market, which is a high growth market with high margins, especially when it comes to the SAF, sustainable aviation fuel category. So it's a sell. I would sell Exxon and buy Phillips 66.
That's why we love Eva. She says things like, I just don't like the company. You say it clearly. We love that. Good for you. All right, final name is Colgate Palmolive. We'll find out what she thinks here. Stock rising today after beating on earnings. Dom Chu has the news.
All right, so there's a reason why the shares of Colgate Palmolive hit a record high today. They hit the earnings trifecta, profit beat, revenue beat, and forecast raise. The performance in this most recent quarter ended was driven in large part by sales growth in all of its key operating divisions. If you even strip out the effects of acquisitions, that's also known as organic growth. So the company, known for not only its namesake toothpaste and dish soap brands, but also Speed Stick deodorant, Fabuloso cleaners, also a brand that my family knows very well, which is Hill's Pet Foods, which, by the way, now makes up 22% of all of Colgate-Palmolive's total sales. We've got two dogs that both devour this stuff. Now, across the overall company, you saw both growth in unit volumes, also pricing as well, with the notable exception being continued volume softness in the China market. Now, the key for many consumer staples companies and their investors is whether they're able to withstand inflationary pressures and still be able to get consumers to pay higher prices for their products. That looks like it is the case for Colgate-Palmolive, hence the record high. I'll send things back over to you.
So Dom Chu, the consumer likes it. Does Eva Ados, the investor, like it? Eva?
I think it's a hold. I like it in this market, given the macroeconomic conditions we just mentioned. I think in a couple of weeks, investors will be happy to own it. It's a slow and steady company. To put it in perspective, the S&P went up 300% since 2008. This company went up 300% since 2008, when the S&P more than doubled that, 660%. So it's not going to make you rich, but it's a great defensive play in this market.